You're listening to Sound Money from Casey Research.
Hello and welcome to the Sound Money Show from Casey Research with me, your host, Andy Duncan. It's my great pleasure today to be speaking to Marin Katusa, the Chief Energy Investment Strategist at Casey Research. Today we'll be talking about liquid natural gas, the potential discovery of a new Bakken field, and how investors should attempt to play gold stocks. Hello, Marin.
How's it going?
Fantastic. Now, the United States used to import natural gas, but with the kind of shale oil and fracking revolutions, it's currently awash with natural gas that it doesn't know what to do with. However, the only way to export this gas is via expensive pipelines and expensive liquid natural gas carriers and very expensive liquefaction kind of facilities. There are lots of risks to this LNG business. Do you think that despite these risks, the United States is going to take on places like Qatar and Australia and become a major natural gas exporter in the next few years?
Not in the next few years. It takes many years to permit, finance, build these liquefaction plants. And what people have to understand is these are multi-$10 billion projects. And the US, along with Canada, is already behind the LNG global race. Australia is a few years ahead. Qatar is definitely ahead. Russia already has two very large producing LNG plants. They're now planning for their third. So yes, when we look out, when you think LNG, you got to think decades out. America has an abundance of natural gas and it will become a global LNG player, but not in the next couple of years.
Okay. Now, as well as liquid natural gas carriers, there are now also these kind of huge, monstrous ships acting as these floating liquid natural gas plants. Now, these can move around the world anywhere at all. So is this going to also slow down the development of liquid natural gas facilities in places like Texas and Louisiana?
Well, what you're describing there is called FLNG, the floating liquid natural gas plants. And, you know, Shell is really the leader in the industry for that sector. Gazprom's talking about doing it. They're the largest gas producer globally. So when you look at the economics, it's still early days in FLNG, but what the whole business plan of Shell is for the FLNG sector. And remember, Shell was one of the pioneers of LNG. So they really know their thing. They're a fantastic company. And what they plan on doing is going after the stranded gas, where there's many, many gas deposits that have been drilled out globally, but are in the middle of the ocean or somewhere where there's no infrastructure. And now the plan for Shell is to produce for less than $1 per MCF. So yes, this will become a major issue down the road, but yet again, it's still early days in FLNG, and you won't see that come out in the next couple of years, but you will definitely see that come out in the decades to come.
So how are you positioning then your Casey Research subscribers to kind of take advantage of these potential investments, which will come on stream in, say, 5, 10, 15 years' time?
Well, what's the big one is when you contract out these LNG plants, globally, there's going to be close to $1 trillion being invested now in the near term towards the LNG capex. And we've found the leader in the world that is trading at a good financial metrics, sound value investing, something that would meet Warren Buffett's criteria. And they are the leader for whether it's Australia, whether it's China on the importing of the LNG, or even the rest of Asia and India. But even the Russians and the Americans and Canadians are going to be looking towards this company to build and provide the engineering and the structures that become this equipment. So what you have to understand is all of these gas companies, they're not going to be building these plants themselves. They go to an engineering firm and then they got to get the equipment. And that's where in the near term, those are going to be the number one benefactors of the LNG sector. Basically, when you think of it as in the gold rush days, the company that sells the picks to the miners who are looking for gold.
Okay. Now, moving on to a denser form of fuel, many cases subscribers will be familiar with your reports on the next Bakken, the first Bakken being a large oil field in North Dakota. Your next Bakken is located in Europe, and it could change this continent's energy map. Now, your reports have been extremely enthusiastic, which can make some people suspicious. How convinced are you that you've uncovered this next monster oil field?
I'm very convinced of it. In 2007, I was writing early on about unconventional potential, and I wrote the first shale report on the potential of shale oil and gas in Europe back in 2007. At the time, the industry shook their head going, "What are you talking about? There's absolutely no potential." Casey Research was the first firm to even mention Quadrilla in years before anyone else. And then today it's the buzzword. I'm actually flying out to London next week to talk about Quadrilla and how in 2007, when we picked it, in 2008 as our top pick, and it returned over 600% gains, it has been a game changer for the UK. And even the Parliament in the UK have called the assets of Quadrilla a national treasure. Now, the geology of the Bakken is not exclusive only to North America. Now, what people have to understand is their oil production was happening in Europe 50 years before it was happening in Texas, it was happening in Europe. So with the Putinization of resources going on in Europe, you look at today, countries like the UK, Germany, Italy, we're talking the big powers of Europe, France, they're importing more energy from Russia than they were 20 years ago. And that has been financing Putin's economy, and yet the infrastructure is in place already in Europe. They have the roads, they have the pipelines. This isn't like going to Africa and finding an elephant deposit with no infrastructure in place. So there's certain areas, just like what happened in the UK with Quadrilla, that have never seen a horizontal well. Now, a horizontal well is common knowledge in North America, but this is just starting to happen in Europe. And in specifically the country that we're talking about, there's been only 5 horizontal wells ever drilled in the country. And using just conventional vertical wells, these wells have produced 500 barrels a day using technology from 40 years ago. Now, when you bring in the horizontal component and the new enhanced oil recovery methods, you're going to definitely exceed this. So I'm very excited for this. More importantly is you're going to get twice as much for your gas in North America, and the oil, you're going to get about somewhere anywhere between 25 to 50% more per barrel than you would in the Bakken. So this is a very compelling argument, and it's very early days. But when people want to have these big scores in the Bakken, you've got to get in early, and it's all about penetrating a new oil field. And that's exactly what this company has done.
Now, in the UK, we have a lot of environmentalists who are very opposed to fracking and things. Do you think there could be any kind of environmental type risk in this new field that you're talking about?
No, because the porosity of the fields, the permeability is such that they don't even need to frack. The permeability of these fields in the new Bakken, or what we call the next Bakken, is about 100 times what it is right now in the Bakken. What fracking does is it basically fractures the rock to allow the oil and gas to come out. It's basically releasing the oil from the tight rock. Because this field, the permeability is so, think of it as it's like a very loose, the oil is already loose. It's just tapping in the low-hanging fruit. So you won't need to frack. That will come in the next few years, and that will be even a bigger, that's the icing on the cake. But the true economics don't need it. And look, there's protesters everywhere. There's, even in the Bakken, whether it's in Canada or in the US in the Bakken, there's protesters everywhere. And just like in the UK, the protesters against Quadrilla, I have photos that I have published from the actual field where the protesters were protesting against Quadrilla's vertical wells, saying that they're fracking when even the protesters were wrong. They weren't fracking. And yet there was 3-to-1 police guided tour to make sure that the drill rig of Quadrilla's gets to site. So yes, there's protesters around. It's part of doing oil drilling, and I don't see that subsiding. But the reality is the energy costs of Europe have to go down if Europe tends to be competitive with the rest of the world. And I see the countries taking UK's lead, which is now pro-fracking. It is pro-horizontal, it's pro-shale, and I see other countries taking that lead because once it changes the economics of your country, look, we all like the idea of green energy, but the reality is it's a very expensive energy. Countries like UK or Germany, their electricity costs in Germany are up 50% in the last 3.5 years.
Now, let's get on then to some technical things. Now, there was a lot of initial enthusiasm from you about this new field, but some of this early news got pricked with this confidence a little bit. Are these just setbacks to be expected? And what's the latest news?
Well, actually, these are just every oil well goes through it at all. What we initially anticipated was drill results would be ready by September 15th. The drilling company was unable to, what we call in the oil sector, trips. So you have to remove your drill bit, and they expected that they could do about 400 meters before doing another trip to replace the bits. Unfortunately, the drillers weren't as effective as they thought they would be, and that has nothing to do with the company. The company contracts out a driller, and that's taken a lot longer. They did get through the horizontal component. That was at our Casey conference and on the interview that we did with the company, and it's going great. To be able to be successful to do a 1,200 meter vertical portion and then a 500 meter horizontal portion where you're the 5th horizontal well in a country, and to be able to succeed and case that well, that is a huge success. And I expect good things from the first well. And this is just a first well of hundreds of wells. What people have to understand, the Bakken has thousands and thousands of wells, and one well does not make an oil field. But they already know that this oil fields have produced up to 100 million barrels conventionally. They haven't even tapped in the horizontal components of this well. So by bringing in the horizontal drilling, you're unlocking a whole new horizon to the basin. And this story is now going to attract the majors. You're going to attract the big fund managers. And more importantly, one of the largest independent European producers has now paid $170 million to farm into 50,000 acres in this country, where the company that I'm very excited about has over 2 million acres of better land. So the market is starting to get it, just like in Quadrilla. When we staked up the land for Quadrilla, it was going for 25 cents a hectare. Now you think about that. You can't now, the next auction in the first quarter, the UK is putting up a new auction. You're looking at least $1,000 per acre now. So that's where you get your big wins on these new oil fields, is getting in early, and it's almost like a real estate play. You've got to have a big acreage position, and then you farm out to a major.
I like a 4,000% increase there. Now, these new developments are possibly dependent on the oil price. Now, with all this new shale oil in the world coming on stream and all this liquid natural gas in the world coming on stream, could there be a slump in energy prices because of that, making these things non-economic? Or do you think demand from places like India and China, along with other Asian countries, will sustain the demand and keep the prices high and make these fields spectacularly economic?
Well, you see, when we talk about oil and gas, we have to separate the regions, and that's why I'm so excited about Europe. Europe depends on 2 regions for their oil. The North Sea is declining. It's declined by 50%. Okay, because of the regime changes in the tax, they haven't been able to attract the reinvestment required to increase production. So the opposite has happened. It's decreased by 50% since its peak. So now the rest of Europe has become more dependent on Russian oil and Middle East, North African oil, which is expensive oil. So Europe's kind of caught in a trap here now, depending on Russia and Middle East. The US has a moratorium. And a lot of people don't know this, but the US is not allowed to export crude oil to the rest of the world. there's one little section in Canada that they have a little agreement in, but the majority of what the US have to ship out is refined products, whether what type of different structures. So you can't send the crude oil from the Bakken or the Eagleford and ship it to Europe and then refine it in the European refineries. That's not going to happen. So this is why I'm more excited, because I don't see a solution for the Middle East issues anytime soon. And this all benefits Russia because they are the largest oil producer in the world. They're the largest natural gas producer in the world. They're the largest uranium. If you take the satellites and influence they have, they control about half of the world's uranium. So Europe is dependent on expensive oil, and that is even more of a reason to develop their own natural resources, which they will do, and it's going to start, but it's where America was about 15 years ago when it comes to unconventional. So this is an exciting period of the energy renaissance in Europe.
So your new field is in the right place at the right time. Now, I don't want to sound like the Mogambo guru talking about oil and gold, but now that we've covered energy, you're also well known for your knowledge of gold mining. Now, is the pain over yet with gold bouncing around the $1,300 mark, or are junior gold mining stocks still something to be extremely wary of?
Well, I've been involved in Canada's third largest producing copper mine. We produce a lot of gold also, but unfortunately, I don't think we are out of the woods yet. I think we still have some tough period. And unfortunately for the miners, the inflationary costs of operating a mine have not gone down the way the price of the commodities have. So when you look at the price of tires have doubled in the last 3-4 years, and yet people don't realize that anywhere from 3 to 6% of your price of copper or your gold is your tire costs. Gasoline is still expensive, labor costs are expensive, and the government is increasing their taxes, and then the more environmental permitting, the more permitting costs, that all comes in. So from a mining perspective, there's still going to be a tough go here in the near term. And I also think for the junior resources, exploring for these metals, whether it's gold or copper, I think it's still going to be a tough go, especially now we're entering the tax loss season.
Do you have any strategies then for our listeners on how to play the gold stocks, particularly for those who lack the time to watch the markets every day? Or should they just stay clear and maybe go through an expert like you who can watch the markets every day?
Well, I think definitely you have to start with what Louis James is doing at the International Speculator. That is a must read. It's something that I read every issue of. And Louis been to, I don't even know how many projects. He is truly a road warrior. We used to travel a lot together, and I've had some changes here lately, but Louis is very knowledgeable. He's been to the projects. He understands what it takes to be successful, and I would definitely start there. And I also think that, my strategy would be, don't buy your desired allocation all at once. The market is very volatile. Put in your stink bids. Let the market come to you, but buy in tranches. I think that's a very important strategy moving forward. More importantly is, if your broker phones you up or you've read some tip or somewhere, make sure you look up at the financials. If the company doesn't have at least 2 years of financial ability to stay alive, where they have the cash in the bank to stay alive for at least 2 years, I'd probably stay away from the company. I've written a lot about that about 2.5 years ago. And that is so important because these resource companies are so capital intensive, and it's very rare that any of them actually create cash flow. And I think that that's a very important aspect to keep in mind.
Yeah. Well, it's been great talking to you today, Marin, and finding out about gold investments in oil and liquid natural gas. How can our listeners find out more about your special energy reports?
If you go to the Casey Research website, and every Tuesday we write up the Casey Daily Dispatch, and you can try out our energy report for a free, risk-free 3-month trial. And all of my 8 years of publishing with Casey Research is there on the website. And I challenge everyone to have a look at it, and if you're not happy with it, it's a risk-free. You get your money back. And I really do try to emphasize that in our reports. It's rare in the junior resource sector. We're up over 50% since January 1st, 2012 on our portfolio. And we're very proud of our track record, but more importantly, our research is very in-depth. We've visited all these projects, we know the people, and we also try to make our research reports educational so people don't just learn about the company, but they learn about the sector. So that's all on the Casey Research website.
Well, I very much enjoyed reading your reports. Thank you very much for your time today, Marin Katusa.
Thanks, it was my pleasure.
You can subscribe to the Sound Money Show on iTunes or sign up to our podcast at Casey Research, where we'd also welcome your feedback. I'd like to thank Marin Katusa for joining us today, and thank you very much for listening to Sound Money Radio. If you enjoyed listening to today's show, please let all your friends know about us to help us grow this podcast. Meanwhile, and until next time, goodbye.